Is Denver's housing market about to freeze with winter? You can no longer price your home based on what sold last month. You now must price your home based almost solely on the other homes that are still on the market. How do you stack up against the competition? Hello, everyone. Thanks for joining me. I'm Haarer, Denver area real estate agent, bringing you news and insights that help you make informed decisions when it comes to your real estate moves. Today, a look at the very latest information that is giving us some insight into what fall and winter will bring us in the local real estate market and what you can do to make the most of the circumstances. First, we'll look at the most recent data and then dive into what it means for you as a home buyer or seller in the coming months, along with my take as to whether you should be in the market at all before spring of 2026. Let's jump right into the data, and you can see that the amount of inventory, homes on the market without an accepted offer, is up 17% compared to the same time last year. But median and average home prices, which is down here in this line, you can see they're actually up nearly 3% market-wide, 2.6%. So what does that mean? It means good homes, staged, updated, turnkey, nicely landscaped, quiet streets, popular neighborhoods, and most importantly, and I cannot stress this enough, well-priced homes are still selling at or near asking price. Everyone else, that's overpriced homes, homes that might need some work, or a combination of the two, are sitting on the market, and we see that reflected in median days on market up 40% year over year. The median days on market-wide now, 35 days, with many homes sitting much longer than that. The average is actually at 53. I don't want to get too into the weeds with the numbers here, but just a few more numbers to paint the picture for you. The attached market, that's townhomes and condos, they're having a much tougher time on the market than the detached market or single family homes. Many home buyers are simply looking for single family homes right now, but those buyers who are looking for a condo or a townhome are finding some of the best deals in the market with the attached home average. This is the condos and townhomes here in the attached column. The attached home average close price, which you can see, where are we here? Right here, the close price median down 3.35%, average down nearly 5% year over year. Lots of concessions for rate buy downs, repairs, and more. We'll talk about more about that in just a couple of minutes. Some of the hesitation around condos specifically is due to skyrocketing insurance and HOA dues. Be sure that you and your real estate agent are doing your due diligence on these associations if you are looking for a condo. Some are great, others are really suffering. But when it comes to those single family homes, year to date, the market looks very similar to 2024. Home prices are flat compared to a year ago. Actually, they're up slightly, 2.5% on average compared to September of 2024. No significant value loss overall, unless of course you bought during a bidding war in the last 3 years. There's a good chance you're taking some sort of a hit. But if there is a significant increase in the number of homes for sale, which we're seeing, an increase in supply, 17% increase year over year, and demand, the number of buyers actually closing, is basically the same as a year ago, what does that mean for trying to sell or buy right now? So home sellers, should you even bother putting your home on the market in the final months of the year? There's a high probability that if you do not do a few key things right, you will not sell, or you will sit on the market so long that you become a stale listing subject to bottom feeders and lowball offers, or worse, not get an offer at all. I often hear this year some iteration of this from sellers. We're not in a hurry, so let's price it higher and see if we can get our price without doing any work to the home. I'm not worried about selling it fast. I'm much more concerned about selling it for the most money. Well, guess what? The two go hand in hand. The best homes, the ones that sell for the most money, often sell quickly. It is very easy to become a stale listing in this market, and all of a sudden you have sharks circling. Those are the bottom feeders I'm talking about, looking to take a massive bite out of your equity. And there are a few ways to avoid this. I'm thinking about doing another video about how to price your home in the current market. Let me know if that would be helpful to you in the comments. But my basic approach to pricing homes right now is to pay almost no attention to what recently sold. Instead, I'm hyper-focused on beating the competition when helping sellers come up with a pricing strategy. Now, I'm not saying you always have to be the lowest priced home, but you have to look attractive when buyers are looking at the landscape in your particular neighborhood. For example, I had a listing this year in a neighborhood that has been very slow with very few showings. 2 days before we went on the market, a very similar home went on the market a few doors down for $50,000 less than what we were going to list at. This is a home over $1 million, by the way. I suggested to my seller that we match the competition's price heading into the first weekend of showings, but they wanted to stay higher. Now, my seller's home had a few cosmetic upgrades that were certainly better, but when a buyer looked at the homes side by side, they felt there was more value in the other home. That home sold right away. And my seller's home sat for several months because there was such little activity in the neighborhood and we had to keep doing price reductions to generate showings. On the flip side, different neighborhood, but similarly slow, I had a seller who listened to my pricing suggestion and was one of the only homes to sell within 30 days in that neighborhood all year. And it was for a higher price than other similar homes. Don't get caught in the trap of thinking your home is so much better than something similar down the street and overpricing it to the point that buyers try writing an offer on something similar but with a more appealing price. So sellers, should you bother being in the market this fall and winter? Well, it's a tough call not being able to see where interest rates are headed in the coming months. But as of the time I am recording this in early October, rates are not in a terrible spot considering where we've been in the last 24 months. And as a result, there's quite a bit of buyer activity right now. Summer vacations are over. Ski season has not quite ramped up yet. There are buyers looking to make a move before the end of the year. If rates remain the same, I predict that you have from now to Thanksgiving to get your home under contract, to get an offer, negotiate, and accept that offer. After that, we will see a seasonal slowdown through the new year. We always do. And pending, rates dropping in some significant way, which it's very unlikely they will, we'll see that seasonal slowdown here in 2025. And if we actually look at the data, closed prices over the last year or so, you can see that seasonal trend. You've got November, December, and January here. You see how flat this is. Doesn't start picking up until February. There's some more interest in March, and then we really ramp up into our high selling season where you command the highest prices in April, May, and June before everybody takes their summer vacations and starts tuning out again into the fall. And I bring that graph to your attention because I have many smart home sellers who are reaching out to me now in anticipation of listing in spring of 2026 because they want to make sure they have enough time to get their homes in the best shape possible. And so they're coming to me asking what's worth spending money on, what's not worth spending money on, what needs to be taken out of the home, how can we rearrange the home decor and furniture for the best marketing, the photos and the showings, where can we add some staging potentially, what landscaping projects are needed. And my goodness, landscaping and curb appeal is so important these days. And it's these sellers who will command a higher price in the peak spring market. Remember, rates are driving all of this activity, and they've been coming down in the last month or so. That's led to steady activity. If mortgage rates spike back up before the end of the year, it's going to be one of the toughest markets to sell a home in during the last few years. If rates come down a bit, I don't know anyone who thinks they're going to come down in any significant way. But if they come down a touch, I think activity will continue through Thanksgiving at a very similar pace to what we are seeing right now in early October. After Thanksgiving, though, it may be a good idea to shut it down, look to March if you can. Ask me as your agent to track your neighborhood market and start getting ready to be the most attractive option come March, April, May, June. All right, let's talk home buyers. Home buyers, I think the fourth quarter of 2025 may be the best time to buy a home in the last 3+ years. We are in a full-fledged buyer's market. The fourth quarter often means other prospective buyers are tuning out, paying attention to football instead of seeing houses. Showing activity may slow down, meaning there's less competition for homes, less offers being written, and more sellers willing to offload a property before the new year at a discount. Now, as you saw from the data we talked about earlier, prices have not seen a major free fall, at least in the single family home category, certainly condos and townhomes taking something of a hit, but no massive price reductions. Generally speaking, different pockets, different areas, different neighborhoods, different zip codes will see something different. So of course, pay attention to that. These are overall numbers. Some areas are seeing significant price cuts. So start to hone in on 3 to 5 ideal neighborhoods and give me a call so I can look at some of the trends and in terms of what's possible when negotiating. If you're willing to buy a home that needs a little bit of work, boy, do I have good news for you. I myself bought a home in my ideal neighborhood this year that needs some work. All of the major systems are functioning fine. There's even a new roof on this home, but cosmetically it's going to need some upgrades. We got a significant discount on it, and the seller paid all of our closing costs, again, in a highly desirable neighborhood. On the other side of the spectrum, if you want something brand spanking new, I have seen some wild deals from the big home builders in the last month. Everything from including appliances to landscape credits to, and this is where you can really benefit, major and sometimes permanent interest rate buy downs. Rates, generally speaking, the average 30-year rate right now for a 30-year mortgage is hovering around 6.5%. Some builders are helping buy down your rate into the threes for a 30-year mortgage. This is a significant deal as they often look to offload as much inventory as possible before January. Now, I have some other videos out there about the buyer process, so I'm not going to spend too much time on it right now, but it's crucial that you do a few things to make this as seamless of a process as possible. The first thing you really have to do is sit down with your agent, hopefully me, to get clarity on what you actually want. I don't just want to open a door for you and tour around a house. I want to get clarity on your goals, not just bedroom and bathroom count, but drive time to work, home layout, ideal neighborhoods, schools, home age and type. Most importantly, let's dig deep on the numbers. You're going to want to get in touch with a great lender who can explain different loan programs and ways to make this process more affordable for you. That helps me as your agent understand what we need to negotiate. Do we want a price reduction on that home that's been on the market for 30 days, or do we want $20,000 in credits to pay for your closing costs, or maybe a combination of both? We have to play through these scenarios as a team, you, the lender, and myself, to make sure we have clarity before we go look at a million houses that may not actually meet your criteria. Once we get through the boring stuff, we can go touring homes with the best mindset. You'll know what you want and be ready to write a great offer for yourself when you see the one. So, should buyers be in the market this fall and winter? Hell yes. If you can comfortably afford the mortgage payment, let's get after it. I think some of the best deals for buyers will come in the next few months. Now, if it's still feeling too expensive, once you run those numbers with your lender and we sit down and talk, now is certainly not the time to force yourself into buying a home. In theory, you'll refinance, but anyone telling you that you should be able to do that soon is lying to you. We don't know for sure when rates will drop so low that you'll feel good about a refi. You have to feel good about your payment today. The other caveat I'll throw in here is that inventory may pull back here in the coming months. Many sellers may opt to pull their homes off the market, reducing the number of homes you have to choose from. But know that come spring, when there are more listings, I anticipate many more buyers too, especially if rates continue trending downward. There are many home buyers who have been sitting on the sidelines this year, kind of putting off 2025, thinking we'll come back in 26. So that's where we are at as of October of 2025, in a market with much more inventory, but moving at a similar clip to just a year ago. It's a stable market that requires a nuanced and strategic approach, whether you're buying or selling. We've really only scratched the surface here today. There's so much more I could go into based on your personal circumstances and goals. Depending on your neighborhood is really important. What pocket, what zip code are you in? What are the trends in your hyperlocal area? So, as always, feel free to book a 15-minute strategy session with me. This is totally complimentary with one goal: to help you get clarity on your next steps. It would be my pleasure to provide you an expert opinion. The link to book is in the description below. I'm Ryan Haarer, Denver area real estate agent. Thanks so much for joining me. Please like and subscribe. Follow me on Instagram, TikTok, wherever you social media, and I'll see you back here next week.